Hi guys, welcome back. Novo Nordisk stock has crashed by 50% from their all-time highs almost exactly 1 year ago. But behind the current weakness lies one of the most profitable, high-margin dividend machines in the whole pharma industry with double-digit dividend growth rates. Their weight loss drugs Wegovy and Ozempic are still raking in cash, but the competition is rising. So, is this dip a huge opportunity for long-term investors or a warning sign? In this video, I will break down the business of Novo, analyze their financials, and will check if they can keep up their insane dividend growth also over the next few years. And if you're new here, my name is Florian. Thank you for joining me today. Recently, the stock has struggled quite a bit and lost 46% in the last 12 months alone. We'll come to the reasons in a bit, but first, this meant that the stock has vastly underperformed the market. But when we zoom out a bit and look at the big picture and the returns of the last 10 years, the picture looks quite a bit different. In this time frame, Novo and the S&P basically had the same performance even despite this huge recent underperformance of the company. I think that this dip is a huge opportunity for investors, and if you have been following the channel for a bit, you know that I recently started buying into Novo. But of course, there are also risks. And to understand these risks as well as the opportunities, we first need to understand what exactly the company does. Novo Nordisk is a pharmaceutical company with a big focus on diabetes and weight loss medicine. But they are also active in rare diseases like hemophilia and cardiovascular diseases and therapies. In the last couple of years, they became pretty famous for their weight loss drugs like Wegovy and Ozempic. With these drugs that are based on the GLP-1 hormone, they are the market leader with 62% market share and could see a huge growth in the recent years. But we also see the first issue here in that the growth of Novo here in dark blue, especially compared to their main competitor Eli Lilly in light blue, has slowed down recently. And this is by far the biggest and most important market for them. GLP-1 drugs for diabetes make up almost half of their total business. And in addition to this, they make roughly further 25% with obesity care products that are also based on GLP-1. Insulin for diabetes makes up further 20%, while the rare disease segment is by far the smallest. The company makes the majority of their revenue almost 2/3 in the US, while international operations are split between the other regions. When we break this down even further by sales segment, not by drug, we see that 70% of their revenue come from diabetes care. This includes the GLP-1 drugs as well as insulin. The second biggest segment is already the obesity care segment with 24%, while the remaining segments together only make 6% of their sales. The growth in diabetes and obesity drugs was also far higher than the growth in the other segments. And speaking of growth, Novo is not only growing organically. They also invest heavily in M&A and in licensing specific drugs from other companies. Just last year, for example, they bought the US company Catalent with 3 manufacturing sites to expand their manufacturing capacity, especially in the US. I find this a very smart move because it addresses one of the biggest issues that Novo as well as their competitors had in the last years. And that was that they could not produce enough of their weight loss drugs to fulfill the demand, which ended in the FDA putting these drugs on their shortage list. This made it possible for other companies like Hims, for example, to be allowed to produce their own generic of these drugs, even though Novo Nordisk and Eli Lilly still have patent protection on theirs. And it usually takes at least 3 to 5 years for new production factories to be built up from scratch. So, with the recent acquisition, the hope is that Novo can now quickly ramp up their production. But the results are not in yet and will only manifest from next year on. And in the meanwhile, these investments have increased their capex cost quite dramatically. This has also brought the capex to sales ratio to 16% last year. And for this year, the expectation is that these investments will be even higher. But from next year on, this should normalize again. And when we check the detailed numbers in my TradingView dashboard, we see that the current capex costs are quite a bit above the values from the last couple of years. This has had quite an impact on the free cash flow, the orange line, that has also slightly declined in 2024, even though their operating cash flow in red still shows a nice uptrend. And while this puts pressure on the stock price in the short run, The expectation and hope is that it will secure their growing business in the long run and help them to be able to support the still growing market demand. Another big reason for the current concerns of investors is that Eli Lilly's current weight loss drugs are more effective than Novo's. Here is the comparison from Lilly's homepage, but there are many such comparisons available. All of them show that Lilly's tirzepatide products are around 5% more effective than Novo's current semaglutide-based drugs in terms of average weight loss. This has led Novo's market share in this GLP-1 market to decline over the past year. But they are still the market leader here with 62% market share, and even though their growth has admittedly slowed down a bit and was lower than the overall market growth, it is still growth. Over the last year, Novo could still grow this business with 11% even though their market share has declined by 10%. And that is exactly the reason why I always include a brief market research in my investment videos. Because I think it's much easier to find market-beating returns in growing markets compared to non-growth markets, even if a company here has periods where it grows slower than the overall market. And let's be real, a market share of 62% is still pretty amazing. And speaking of the market, as NBC News points out here, nearly 1/3 of the global population is obese or overweight. And these numbers have risen pretty steeply in the last decades. Grand View Research expects a market growth of over 22% until 2030. And this is a rather conservative prediction. Some other market researchers even predicted a growth of up to 27% per year until 2035. And at least in the next few years, the GLP-1 based drugs will be responsible for the majority of this growth. And while this is the quickest growing market for them, it is not the only one. The cardiovascular drugs market is also expected to grow with around 4% CAGR until 2033. This trend is also driven by increased obesity, but also other trends like an aging population or unhealthy diets. And even today, cardiovascular diseases or CVDs are the #1 cause of death worldwide and are responsible for 32% of death, with the majority being attributed to heart attacks or strokes. The patients also overlap significantly with diabetes or obesity patients. So Novo is operating in not only one, but multiple important and growing markets that also have a similar patient group so that they can leverage synergies between these markets. And we can not only find obesity in CVDs here, but also the diabetes market. This is also a market that is expected to grow significantly, and Novo's own expectation is that by 2050, 1 person out of 8 will have diabetes. And even though Eli Lilly currently has the more effective products in their obesity market, Novo is already working on their next drug, CagriSema, that shows a higher weight loss than Wegovy, even though it is still not on the same level as Lilly's Zepbound. And what I find even more interesting is that they are also in the late trial stage of oral Sema, which is the first oral GLP-1 drug for obesity. This was already submitted to the FDA for approval earlier this year. And with this, 30% of all people could even achieve a weight loss of higher than 20%, which comes close to Zepbound already. If you ask me, I'd prefer a slightly less effective pill over a shot every day. And the weight loss effectiveness is also not the only parameter here. There is also the topic of production capacity that I already addressed earlier. In the end, the best drug is of no use if it can't be produced in an efficient and affordable way. And because this topic also always comes up when talking about pharmaceuticals, yes, the patents for these drugs will eventually run out, but at the moment we don't need to worry about this. Most of these drugs are still patented until the early 2030s, so there is quite some time for the development of the next generation drugs that can be patented again. So now that we understand the market and Novo's position, let's dive into their financials. Income-wise, Novo shows a nice uptrend here over the years that even picked up speed in the last 2 years. We can see this over all metrics like revenue, EBITDA, net income and EPS. Only the free cash flow went down slightly last year due to the increased capex cost, as I already showed you. When we zoom in and look at the numbers by quarter, we see that the revenue and the EBITDA in the last quarter did decline a bit. This has several reasons. First, Q4 of last year was exceptionally good due to pharmacies and wholesalers increasing their stock levels with the blockbuster drugs. Then, the Danish krone is currently quite strong against the USD, which also has a significant impact, and last but not least, especially in the US, the prescriptions of Zepbound, Eli Lilly's drug, overtook the prescriptions of Wegovy, which is another reason why Novo stock came under pressure. But all in all, Novo could grow their revenue in the last 5 years by over 19% annually, their free cash flow by 22.6%, and their EPS by 22.4%. These are all very respectable growth rates that we usually only see in the tech sector. And even if Eli Lilly's drug is currently more effective and seems to have won the favor of US patients especially, that does not mean that Novo Nordisk is not growing anymore. We see this in their last quarterly report. In the last quarter, they could still grow with close to 20% growth rates in sales and operating profit. Their net profit did grow by 14% still and their EPS by 15%. And the company also maintains a strong profitability across all metrics. In fact, its profitability is amongst the best of all global pharma companies. Their gross margin exceeds 83% and their EBITDA margin is close to 51%. Both quite remarkable numbers and also still growing. This reflects the high pricing power of their products, especially the GLP-1 drugs. The free cash flow margin saw a decline due to the high capex spending, but it is still at a very robust 25%. What I find most remarkable though is their insane return of invested capital of above 50%, which shows their exceptional use of capital. So despite the current weakness of Novo stock, these profitability metrics are all still very strong and in every single case way above the profitability of Lilly. I'll show you the direct comparison when we compare Novo to their closest peers later in the video. But first, let's also have a look at the balance sheet. The first thing that catches my eye here is that their debt level and goodwill has recently increased significantly. This is both due to the acquisition of Catalent last year. This has also led to an increase in their net debt to EBITDA levels. But despite this increase, it is with 0.5 times still on a quite low and very manageable level. And Novo is also buying back shares on a regular level. Over the last 5 years, they bought back 1.3% of shares on average every year. So the company also has a very clean balance sheet with a low debt level, and they have been buying back shares every year for decades now. And they did this even though share buybacks are their least priority when it comes to capital allocation. Their highest priority here is R&D, followed by paying an attractive dividend. Only after that comes acquisitions and then share buybacks. So they put quite a large focus on dividend and dividend increases. At the moment, they have a dividend yield of slightly above 2%, which is not too bad, and they could grow it with over 20% every year for the last 5 years, which is pretty amazing and one of the reasons why I started my position. Their free cash flow payout ratio sits at 60% currently. This is not great, but still well within my acceptable range. And I also think that this will go down again when the current capex cycle is over. You might think now that such high dividend growth is unsustainable over the long run. At least this is my first thought every time I see a dividend growth of above 20%. But in case of Novo, they could keep up a growth rate between 15 and 20% since the 1980s already. So we have a track record of 4 decades with such a high growth. So all in all, we have a financially very healthy company with amazing margins here that, in my opinion, has a great strategy to award their shareholders. The question is, can they keep up this performance or are the best times over now? The 26 analysts that give a 1-year price target on the company are overall pretty optimistic. The average price target is with 646 kronen, about 32% above the current stock price. Their EPS should also grow with a CAGR of 14% until 2028 and their revenue still with 12.5%. This is admittedly a bit lower than the growth in the last 5 years, but still well within the double-digit range. I also think that a lot of pessimism is currently baked into the stock. One indication for this is that the stock price jumped after their Q1 earnings despite them actually lowering their guidance for the year. They themselves think that they can grow their sales between 13 and 21%. They also lowered the profit expectations by around 3%, but it is also still between 16 and 24% on a constant exchange rate basis. So this is not great, but again, the expectation is still quite a stable growth. And all this comes with what I believe is a very reasonable valuation. Their PE is with 19.2 slightly above the sector median of 18.5, and so is the EV to EBITDA of 13.7 compared to the median of 11.9. The price to cash flow is with 32.3, currently pretty high, but again, this only shows the investments that Novo is currently doing to further fuel their future growth. And when we factor in this growth with a PEG ratio, the picture changes all of a sudden. Because the PEG ratio that includes the EPS growth is with 1.3, quite a bit below the sector median of 1.8. I would still not go as far as saying that the company is very cheap despite the crash, but I think that the current level is pretty reasonable. When we compare these values against the company's own last 10 years though, it does indeed appear rather cheap. Right now, their valuation is close to the lowest levels they had in these 10 years in all of these three metrics. Before I sum this up and come to my conclusion, let's also briefly compare them to some of their closest peers. And if you find this video helpful, please hit the like button and subscribe to the channel so you don't miss out on my next video. It really makes my day, and as a thank you, I promise you to read and reply to all of your comments. So for today's peer comparison, I choose the main competitor of Novo, Eli Lilly, as well as Merck, Roche and Bristol Myers Squibb. The most interesting of this bunch is definitely Eli Lilly. And by the way, if you're interested in a more comprehensive comparison and deeper look into the weight loss business of both of them, I have a video about exactly this. I'll put a link to it in the comments below if you want to dive a bit deeper here. But back to today's comparison. In the last 10 years, Eli Lilly had by far the best total performance with 1000% of this group. Novo is with 225% quite a bit behind Lilly, but can still reach second place here. From a dividend perspective, the picture changes a bit. Here, Lilly pays the smallest dividend of the bunch, while Novo sits in the middle of the pack. Where Novo really stands out is the dividend growth, where they easily take the crown. In terms of valuation, we have a bit of a mixed picture here. While Eli Lilly is by far the most expensive, with valuation metrics that are about twice as high as Novo's, the rest of this peer group is even cheaper. My favorite metric here is the PEG ratio that includes the growth rate. And here, Novo and Eli Lilly do not appear overly expensive anymore, with Eli Lilly even having a lower PEG than Novo. Bristol Myers stands out most here with a PEG of only 0.12. We can see the reason for the reasonable PEG ratios for Novo and Lilly in the growth rates. Again, Lilly could grow quicker here in the last year, but on a forward-looking basis, the growth should go down for both companies. For Lilly even more so than for Novo. Only in terms of EPS growth is Novo still expected to increase its growth, while Lilly should also slow down, also on a very high level. Where Novo can really stand out is the profitability. Here, they take the first place with quite some margin in most cases, which shows their strong and resilient product portfolio. I already mentioned that I started an investment in Novo recently, so I am definitely a bit biased here. But what I like about Novo, in addition to the currently quite reasonable valuation, is this exceptionally high profitability combined with their double-digit growth rates. I also like the capital allocation strategy that puts a huge focus on dividend and dividend increases. I think this combination shows their strong market position in the markets they are active in, which puts them in a prime position to keep growing like this in the future. And just to make it clear, this video is about Novo, not Eli Lilly. So some of the things I said about Lilly may sound a bit negative. But in fact, I also like Eli Lilly very much, and they also have a top spot in my watch list. I just think that they are a bit expensive right now. But this is just my opinion. So what do you think about the company and the sector? I'd be really interested to hear your thoughts down in the comments below. And guys, there is one company that really stood out as an investment in the last few years, and that is Nvidia. And just a couple of weeks ago, they reported the last quarter, which was pretty eventful with many new announcements that got me pretty excited. If this sounds interesting to you, check out this video right here where I go over all of these crazy news. And this is no financial advice. So please, before investing, do your own research and only use this video as a starting point for your own analysis. That being said, thank you so much for watching guys, and see you in the next video.